Welcome to the NISM Masterclass. I am your host, Sashi Krishnan. Our purpose at NISM is capacity building for the securities market ecosystem. And as part of that purpose, we sit down with the gurus of the securities market to understand and learn from their journey. And my guest for today is Balasubramanian. We all know him better as Bala. And Bala is the MD and CEO of Aditya Birla Sun Life Asset Management Company. And he has been with Aditya Birla Sun Life Asset Management Company for more than 30 years now. And he's a veteran of the mutual fund industry. In fact, Bala started his career as a debt dealer, I remember, grew to be the CIO of Aditya Birla Sun Life AMC, and then took over as the CEO of Aditya Birla Sun Life AMC. And I think he's one of the longest serving CEOs we have in this industry. And, more important than that is that he was the chairman of AMFI. But I think what I especially need to mention is that Bala was also on the board of governors of NISM. And welcome to this masterclass, Bala, and thank you so much for sparing time.
Yeah, my pleasure, Shashi. And so I think good to interact with you, especially given the fact that you have spent more than 40 years in the capital market.
Correct.
Being part of the original founder of mutual fund industry, which is UTI.
Right.
And then being part of industry, I also became a regulator and now running the NISM.
Right.
So I'm happy to be part of your show.
So Bala, the first question I had for you was that, the AUM of India's mutual fund industry has now crossed 80 lakh crores. So what is the fundamental driver behind that? Do you think mutual funds have now become the preferred route for, investment for the younger generation in India?
So I think it took some time for the MF industry to get that true recognition.
Right.
That is a vehicle which is meant for savings. It's a vehicle meant for creation of wealth over a period of time. But also the vehicle which can act as alternate to most of the investment that one consider as a saver.
Right.
So I think this got the attention of the investors after every debacle that you would have seen in the capital market. 2009, there was a capital market debacle. Then after that, even this before COVID time demon. In fact, the post demon time, which is the 2017, I would say.
Right.
The whole country, if you remember, realized that you need to create alternate
right.
to even the cash holding. That's why people realized
right.
holding cash or holding money in the account, the bank account, without making the right investment can also work against the principle of compounding.
Okay.
So that's why I think the mutual fund kind of today.
Every time there was a sort of crisis in the financial markets, the simplicity and the popularity of the mutual fund was, people started realizing that.
Exactly. So as a result of that, now the 80 lakh crore size that you are talking about.
Correct.
I think clearly it has come on the back of one, whatever the messaging that was being done continuously.
Right.
That importance of saving, importance of planning for the future needs, importance of SIPs,
right.
Understanding of the power of compounding and so on and so forth. And that has now become real. And to large extent, I would also assume that the mutual fund industry also did that equal amount of hard work along with the regulator. I think I would also, as I mentioned, even SEBI as a regulator, while they are supposed to be the watchdog for the capital market, they also played a very critical and key role in encouraging mutual funds actually to grow the pie in a very orderly manner, taking into account the confidence of investors need to be built through the governance and various other things. That's something also helped in building a very strong foundation for the MF industry. And today, as you rightly put it, normally any investment choice, one looks at it. You start from bank account to the fixed deposits and
right.
real estate and gold, then come to the mutual fund. Right. At least today, I'm happy to say that mutual fund now comes as part of the primary
top of the list,
right on top of the funnel,
right,
as a first choice of investment that you can think about the mutual fund. It normally comes as a parking, then it comes for planning for your future needs. Right. That's I'm happy to say that today the mutual funds have become the primary investment vehicle as a result of that.
So in that context, Bala, I just wanted to check with you as to whether the risk profile of the retail investor has changed. Because, are retail investors now willing to take, higher risks, more exposure to volatility? Because now they know that if they need to get inflation beating returns, the only way they can do it is by investing into riskier assets.
Correct.
Similarly, are they less prone to panic selling when there are these crises in the, financial markets? Because both these things need to be in place, right? You need to first have the ability to absorb those sort of shocks and also have the risk appetite.
Correct. There is one fundamental shift has happened. I think the market always, historically, if you look at the first decade and then second decade of the 19th century, 19th and then 20th, if you look at it, each of the 10-year period, the behavior market and the behavior of investors also kept changing.
Okay.
As the people understood, staying invested would probably give a better outcome,
right,
than staying away from the market.
Right.
So these are the principles. I think once people start understanding more and more,
right,
I would probably assume that today the mature level investor is so high, the panic selling has stopped. On the contrary, if there is a fall, the normal question which I used to get in the before say 2009 or maybe before 2004, 2005,
right,
the one common question which should come is, should I redeem?
right,
Should I redeem and then come back later?
correct,
But today the common question which comes is, should I add?
right,
Or should I start my SIP or should I increase my SIP?
right,
So now narrative has changed. I think it's coming from the fact that people have realized, if it is especially equity market, if I take, after all the ups and downs, which is what we also keep educating investors, that every 3 years you'll see a bull cycle and every 1.5 to 2 years you'll see bear cycles.
right,
But since it gets repeated every now and then as a bull cycle and bear cycle, what remains permanent from an index momentum point of view, it keeps touching a new high. Every 3 years I see is touching a new high and new higher low.
right.
That's how the market always behaves. Because I think over a period of time, investors have understood. Therefore, the maturity levels for investors have gone up quite significantly. Therefore, the question of panicking in the market has not come this time around. And especially, I would say in the last 3 years, one of the worst periods we have seen in the geopolitical side globally. And despite that, Indian equity market remains very, very resilient, mainly because of behavioral change.
Okay. So, Bala, you've been associated with this mutual fund Sahi Hai campaign since it was launched, I think, in March 2017. In fact, maybe you were part of the initial committees that actually thought out this entire idea. So, what has made this campaign so very unique? Because one is, as you said, people are now willing to bet right through the cycle and, keep repeatedly investing because, being consistent is, I think, the most important message that this mutual fund Sahi Hai campaign sort of gave to investors.
See, when this I would thank SEBI as a regulator. In 2012, they completely revisited the mutual fund regulation.
Right.
And then what are the support need to be given for the mutual fund industry to promote this as a strong investment vehicle for the savers. That is the time they kept aside for 2 basis points of our expenses, which are management fees,
Right.
should be kept aside for the purpose of only education, like a CSR.
Right.
Compulsory, the money has to be spent only for the purpose of educating, nothing else.
Right.
So then the AMFI, I was the chairman of AMFI board that point of time, and it was the responsibility of the chairman of the AMFI board to chair the financial literacy committee.
Right.
So he brought a set of people from the industry players, from marketing guys, and we engaged the agency that how do you promote, given the fact that if you look at the return on 20 years, the returns have been positive.
Right.
But if you look at the same 20-year period, break into multiple buckets, volatility would have come in multiple number of times.
Correct.
And would have driven the confidence of the investors completely shaken.
Right.
But despite that, the equity market has given such a good return, experience is given. That's why it came the mutual fund Sahi Hai for long-term purpose. That's the way the coining of mutual fund Sahi Hai came.
Okay.
When we created this advertisement, the idea was actually to tell people actually mutual fund Sahi Hai for long-term. Second, it should also be part of the investment, regular investment vehicle, the way we do a recurring investment.
Right.
And third is you are investing for 25 years or 30 years. So don't look at the short-term fluctuations. That's the way I actually put it as a part of the advertisement campaign.
Right.
And finally, we also thought about that it should be part of the every conversation.
Right.
That every family members have over a cup of tea and coffee.
Right.
That every person actually is discuss about their savings or investing. That naturally should come part of the mutual fund Sahi should come part of the conversation.
Correct.
So that's where we started off. And thanks to, of course, regulator as well, who actually, despite the mutual fund subject to market risk, supposed to be more superior than a mutual fund Sahi from a regulation point of view, because supposed to tell investors mutual fund investing and market is supposed to be volatile, therefore be aware.
Right.
So despite this being a strong word, you have to have something to sit on top of it. That's why mutual fund Sahi and SEBI approved it. I remember my own conversation with the regulator and the industry members, and finally took off from the ground. In fact, has done wonders. Today, it has become one of the most powerful brand. It's something is now we can see it. The proof of eating is already there in the outcome that we have seen.
So I wanted to pick up on that particular point that you made about mutual funds IA sitting on the top of mutual funds are subject to market risk. Because there has been an argument that says that this message sort of tends to oversimplify the risks involved in market-linked products like mutual funds. So how do we sort of ensure that the investor knows that this is a great vehicle to be in, but there are also risks that are involved in that, to which you need to be cognizant of?
So I think along the side, the beauty of mutual fund Sahi, one of course mutual fund Sahi, it is to give a message that it's a Sahi vehicle for the long-term investing. That's very clear.
Right.
At the same time, portfolio construction, the way portfolio manager carries out the responsibility on day-to-day basis and managing the hard-earned money of public, that also had to come with, had to be revisited.
Right.
Especially the regulatory framework.
Correct.
Which is nothing but exposure that we take and what kind of exposure we can take, what we should avoid.
Right.
See, actually in our offer document, we start even saying negative list. There are some other investments that you will not make.
Okay.
So that means you take a commitment, rather you give a commitment that what you'll do, what you will not do,
right,
how the kind of exposure that you will take, then how do you manage the portfolios, walking the talk, if you true to your level, all these things will be part of the
disclosures, and transparency has increased to such a level that you are putting out all the risks that are there so that the investors.
So I'll also even mention that they used to have the disclosure of risk.
Right.
By way of color code. We used to have a box where we put red means high risk, green means low risk, and so on and so forth. Right. And eventually realized that is not the right way of doing it. The industry actually, one beauty of mutual fund industry, AMFI generally forms a committee of various market participants driven by AMFI, supported by SEBI to come out with various policy framework. In fact, the riskometer, what we call it,
right,
which actually gave a birth, or riskometer gave a birth from the color coding.
Correct.
So moved from color coding to the riskometer.
Right.
Second is mutual fund categorization of schemes.
Right.
And earlier, we all used to define large cap means the definition can vary from 1% to other person, completely opposite of each other.
Okay.
Somebody would say 1 lakh crore is a large cap market cap. Somebody can say 10,000 crore is a large cap market cap. Right. Anybody can say anything that you want to say. There is no uniformity. Then we brought in uniformity in managing funds. Today, if you take large cap fund means it's large cap funds only, investing only up to top 100 companies there.
Correct.
It will not vary from mutual fund to mutual fund.
Definitely
standardized disclosures, standardized way of interpreting, even for the money manager can always interpret differently as it suits them. In order to bring in uniform definition, uniform interpretation,
right,
regulatory framework got changed. This in some sense, I would say, mutual fund Sahi is right. Mutual fund subject to market risk also is right. At the same time, you need to also pay attention to the risk that is associated with managing portfolio. Given the fact that it is a hard-earned investors' money is coming in, I must also duty bound. I am also duty bound to deliver longer-term outlook basis this risk management practice as well.
Right. So Bala, the other big sort of movement in the mutual fund industry has been the systematic investment.
Yes.
And so SIP inflows in the last month hit a record high of something like 31,000 crores. That is in the month of December. And I think now the SIP accounts are close to, if I'm not mistaken, 10 crores. And the AUM is something like 16.63 lakh crores.
Yes.
Why have SIPs also captured the imagination? Just like mutual fund Sahi has captured the imagination of, the investing public.
Correct.
SIPs have also captured that information, that the imagination of the public.
So I think
So can you tell us that story?
Yeah. See, the SIP is something. It is nothing. It was nothing new to the industry.
Correct.
It is a recurring in nature, and Indian investors generally understand the recurring in nature of investing. quite extensively because they used to do it in their bank deposits, recurrent deposits.
Right.
So the mutual fund have been, of course, offering the product right from 90s. But they caught the attention of people after the mutual fund Sahi. The mutual fund Sahi, we give a lot of importance for regular savings. Second is every household today, they have two parts of investment needs. One is the need, second is the want.
Right.
The needs are actually the larger component of the investing public is the need, which is nothing but preparing yourself for your buying a house for the future, buying a car, buying a two-wheeler, and plan for your educations, plan for retirement. All these things actually is a part of your financial saving discipline.
Right.
Then we started harping on that SIP, that the best way actually that you can make money in the market. Be part of the market at ups and downs. At every falling also I'll keep investing, every rise also keep investing. Therefore, rupee cost averaging would be the key mantra for generating, put your money to a better use and generate a long-term compound.
And SIP is much easier to understand than something like rupee cost averaging. That sounds too technical, isn't it?
Yes. The rupee cost average, nothing but when the market falls, you buy the same unit, same scheme you buy, and you get a higher units.
Correct.
If the price goes up, you get the same scheme you buy, but you get the lower end. Amount remains the same. Amount doesn't change.
Correct.
The very fact that you remain invested every ups and downs, and still you are able to see the benefit that can accrue of the power of long-term compounding in the investment that you can get. That's something we started harping with various examples. I still remember one of the ad that came out with that we first ad that we released when we started the mutual fund Sahi. There's one ad we created which is somebody holding a child and in a marriage function, and somebody asking question to him, are you planning for the marriage for the child now? Before you start planning for the marriage, first you have to start saving for his future.
Before his education.
Cash for his education.
Right.
Therefore, you start with SIP rather than start thinking about the child when they grow up, how they get married and so on and so forth. Don't imagine for that.
Right.
Before you start dreaming for other things, you start the discipline of savings. That's why we actually started giving the messaging part. I think my own belief is this continuous messaging, all mutual funds harping on SIP investing is the best way of investing in mutual fund. And that has become the way of life.
Right. So at Aditya Birla Sun Life Asset Management Company, you have started something called SIP Life. SIP for life. You have taken this concept of SIP to SIP for life. Can you tell us how this full circle approach would be beneficial for individual investors?
Yeah. See, I mentioned about the way of life.
Right.
The way of life is actually investing in SIP continuously for various needs.
Right.
But as time progresses, this probably is called the accumulation stage. I start investing from the age of 30.
Right.
I'll keep investing till the age of 60.
Right.
From the age of 40, again I'll keep investing till the age of 60.
Right.
Then after 60, when the income streams comes down, because income stream generally is more certain. For most of the working employees, is till the age of 60, which is retirement age.
Right.
After that, your expense is not going to get reduced. Expense is going to remain the same. Lifestyle is going to remain the same. But unless you accumulated money, accumulated wealth, during your earning period, and then during your earning period comes down, retirement time, you need to also have some sort of money which can withdraw it.
Right.
And you can withdraw till you are alive.
Right.
At the same time, you will withdraw only to the extent you need it. You will not withdraw the entire amount. Therefore, you still stay invested. Therefore, the SIP is for life, remains till your lifetime. And you can also withdraw once you retire, or maybe once you suddenly start thinking your income level goes down. Therefore, I can start withdrawing it.
Okay.
Therefore, withdraw only to the extent of monthly need. Rest of the amount continues to grow for in the longer term basis.
Okay.
That's why we put a SIP for life.
Right.
So the way SIP has become way of life for everyone. And we said the SIP for life is more important. The moment you plan for SIP for life, it brings you a deep commitment from individual savers that I'm not investing for 1 day or 2 days or 3 days. I'm investing beyond retirement and also beyond the imagination of my lifetime.
Okay.
So that's the way we said that it has to be thought about as a long-term investing. It brings in discipline. It brings a regular habit of savings. It also ensures that your money remains saved. Sometimes we have, if you don't have a discipline of saving, there's high probability you will end up spending the money somewhere else.
Right.
Therefore, your wealth effect could come down. Therefore, it can potentially face some issues when you have to meet your real needs, especially in a rising cost time.
Okay. So Bala, I have a question relating to choice. There are over 50 fund houses today. There are almost 2,500 schemes. Each of them comes with subvariants, direct, growth. There is so much of choice available now for the retail investor that selection process itself has become very intimidating. It's becoming very overwhelming. So how should an individual investor narrow down his choices so that the entire process becomes manageable, given whatever his financial goals and risk appetite is, of course?
Correct. So I think the way one should go about is, one is, of course, you yourself choose.
Right.
The way the mutual distribution community also becoming larger.
Right.
So they are more like your family doctor,
Correct.
or family lawyer,
Right.
and physician kind of things.
Right.
Therefore, these are the people can also provide reasonably good advice or suggestions as to how they should go about building the portfolio.
Correct.
In addition to that, even if one wants to do it individually by themselves, all the product offerings is give you choices. It's like going to any 5-star hotel, you will get a menu which is of all kind of things they offer.
Right.
Ultimately, we know what is the basic needs of us, which I call it is the core kind of schemes.
Right.
And the core schemes are very simple. It's from large cap to the mid and small cap. It's a core schemes, diversified equity portfolio. And that something is the one which should form part of the 60 to 60% of your portfolio construct.
Okay.
And second is somebody who doesn't want regular income.
Right.
He can actually choose a growth plan.
Right.
And then stay invested till such time you stay invested. Your money keeps growing by NIV.
Right.
And it can go up and down depending on market actions. But it will
Compounds over.
It's a compounds over time.
Right.
Whereas if you choose a dividend plan or monthly dividend plan or weekly dividend plan,
If you have income needs.
if you have income needs,
Right.
then those options are provided only for those kind of people who also have different needs. See, mutual fund is one vehicle. It actually helps in fulfilling every investor's needs.
Right.
So it gives you choices.
Right.
From a customer point of view, looking at various choices, you should not get confused.
Okay.
With every customer, every investor, have got time period defined by him. Time period of investing has to be defined by him or her. Quantum of investment has to be defined by them. And the period of investing, at what period they will be able to invest, how much of the money is defined by them. Risk appetite, it is known to them. Whether a conservative investor or aggressive investors, they know it by nature.
Right.
I mean, therefore, the choosing of the schemes have to be decided on the basis of these assumptions. But of course, when we do it, you may find it difficult. I think once you start investing, mutual fund, my own belief is the best vehicle to choose. But within that, of course, there are multiple fund houses are there. You can always ask.
Right.
So many fund houses are there which to choose.
Right.
That is where I think it comes in the period for which one have seen cycles.
Right.
So,
that is why there is so much of disclosure in terms of how funds have performed over different periods of time. All that is standardized.
Correct.
So there's a lot of information available to the retail investor to make that decision as to which fund house to choose, which fund to choose, which variant to choose.
Correct. So only the area where investors should not get carried away is at any market cycle, somebody will do extremely well.
Right.
Somebody will do very poorly.
Right.
But either side, we should not make an assumption. Somebody is doing extremely good, therefore is good. Somebody is doing very badly is bad. Right. So those assumptions, I think, will not long last for too long. I think ultimately the market corrects itself.
Correct.
Therefore, the best is choose fund houses who have a long years of experience.
Right.
And backed by
a long track record
and then the backing of commitment of shareholders and so on and so forth. And finally, of course, choose the core schemes, and within that you allocate maximum portion of money, and then other choices are given which you can always choose.
So even within the various funds that are available, sometimes because this choice becomes so difficult, is it better actually to look at a passively managed fund like an index fund or an ETF? Is that simpler for a retail investor? Because one, they definitely have low cost. Two, they tend to remove what we call fund manager risk.
Correct.
I mean, they have their downsides, no doubt, about the fact that because you're investing into an index, you cannot avoid some of the poor performing companies because you have to invest into an index. But should retail investors be looking seriously at index funds and ETFs also?
So that should again be seen as a choice.
Okay.
When I mean choice, but anything that we take when you take a mix of both active and passive.
Right.
So it should form part of
Do
the
you think we should have a mix of active and passive in our portfolio?
in our portfolio. At the moment you take that as a concept,
Right.
the active fund is something India being one of the bigger market,
Right.
growing market, and become about say 10 trillion economy maybe the next few years. And then beyond that, we are looking at the trillion economy.
Right.
You will see the breadth and the width in the market also widening.
Right.
But those breadth and the width in the marketing are widened do not get captured in the Nifty or Sensex. Nifty is only 50 companies.
Right.
Sensex only about 30 companies. There are multiple indexes are there. But at the same time, market is getting expanded. So you'll find many newcomers coming into the market. The money manager's job is to identify, spot the opportunities.
Right.
That can actually help them generate alpha. When I mean alpha, I mean extra return
Correct.
over the indexes. So that's his job of the active portfolio manager.
Correct.
And India being a market which provides such a great opportunity, active fund manager cannot be ignored. And therefore, that should be part of the portfolio. But passive is something is actually hedging, de-risking yourself. The one way to de-risk the active portfolio manager sometimes can also underperform. How to de-risk? That comes as part of the portfolio allocation. So that's why I call it as it coexists. And then within the index as well, you have a Nifty index, you have a Sensex in ETF or index fund.
Right.
Or you have a mid-cap index fund.
Correct.
And within that, you can, of course, choose funds that can suit your need. But at the same time, if I'm able to give longer term time horizon, which is say 7-10 years or 15 years kind of things, I would probably assume that active portfolio manager will be able to deliver better return than passive. Given the fact that India is it's a developing economy, therefore it provides great opportunity for fund managers to pick stocks. At the same time, passive is something, as the more and more money coming in, market became more and more matured, the difference between the passive and active would narrow down. But of course, active should not be considered as if it's a high expenses versus low expenses.
Okay.
But we must also remember the fact that SEBI, in all fairness, has actually taken care of the investors' interest by framing the policy in such a manner. As the size becomes bigger and bigger, the scale benefit of mutual fund industry should also go to the investors by way of lower expenses. So that today, if you look at the gap between the index funds or ETF, in terms of expenses versus active funds,
Right.
Today is very, very narrow. Yeah, it's shrinking.
Right.
So therefore, one should not.
So low cost shouldn't be the only reason to invest into a passive fund.
Exactly.
What you're trying to say, I think, is that active funds are very necessary for a portfolio because India is a growing country and a growing economy.
Yes.
But passive funds will de-risk, you to some extent. So you should have a mix of both.
Exactly. Through the asset allocation model, you have a mix of both. I always call it a coexist.
Okay. Well, but Bala, while on equity funds, we could have this sort of mix of passive and active. Should you also have debt funds as part of your portfolio? Because if you look at, the total debt AUM in this country, it is still something like only 17 lakh crores out of the entire, 80 lakh crores.
Correct.
And the retail debt in AUM is even lower. It is something like around 5.3 lakh crores. So Indian mutual fund investors haven't really taken to debt in a very big way. Though I would believe that compared to other traditional savings instruments that people put money into like FDs or PPF or the EPFO, debt funds have a lot of advantages.
Correct.
So what place should a debt fund find in a, investor's portfolio today?
See, today, of course, from investor's point of view, though even the mutual funds IA, and it launched for equity.
Right.
We also, as a association, launched fixed income also Sahi for mutual fund point of view.
Correct.
We launched a new ad that we did in 2019 or 20. We did.
Right.
But the very fact that we did that, from an investor's point of view, you need to have a mix of both. Equity will give you longer term wealth creation opportunity.
Right.
Fixed income will give you a saving opportunity.
Right.
At the same time, within the fixed income space, if one looks at it, you can create emergency funding. Every investor has to have fund to meet the emergency needs, which that's what I think comes in the form of liquid fund.
Right.
And most of the investors should also remember the fact that whatever the money that they have, large component of their money lies in savings account or fixed deposit. Then you rest you start investing in the other asset classes such as real estate, gold, and equity, and so on and so forth. The large component of your investment that remains in the fixed income related instrument, some of portion of it can come to the mutual fund fixed income schemes.
Okay.
It actually gives two advantages. One, of course, money is at any point of time. Of course, the money is invested in high quality debt bonds in the country, including government bonds,
Right.
state government bonds, and the AAA bonds. The direction risk is reduced. Second is, this is only mutual fund schemes in the country. Rather, the fixed income schemes is the only schemes which can help the investors to participate in the interest rates up and down. As we see equity market going up and down, interest rate also goes up and down depending upon inflation, depending upon the what you call growth momentum slowdown or higher growth or lower growth. The Monetary Policy Authority with the Reserve Bank of India, every 2 months they meet and they keep moving interest rate up and down.
Right.
The yield goes up and down. Today, if I'm borrowing, say today, to give an example, the home loan rates in the country used to be in somewhere around 8.5%, 9%, just about 1.5, 2 years back.
Right.
And today, the same rate is today about 7.3%.
Right.
So, how come the rates have dropped by about 2%?
Right.
Because the Monetary Policy Authority, the Reserve Bank of India, has been cutting rate.
Correct.
If you have dropped parallel in the mutual and fixed income schemes, I would have probably invested at the yield of about 9% about a year back. Today, the same is about, say, 7.5%. The 9%, 7.5% drop in the rates,
Right.
it comes as form of capital gain forming the portfolio.
Correct.
So, this is the only option that investors at large, otherwise, they want to capture the interest rate movement in India through a normal fixed deposit investment, cannot do it, cannot be done. Whereas the mutual fund enables that. The moment you understand this component of fixed income schemes, my belief is fixed income mutual fund schemes could also become a major investment vehicle
Okay.
for investors in the country because it has got all the other qualities
All the
or
attributes
expectations,
to-
attributes the expected investor will have, including daily redemptions. You can redeem anytime you want, except you cannot withdraw it instantaneously beyond an amount.
Right.
So I think it can also become primary investment vehicle as time progresses. Even globally in US, money market funds actually runs in about,
Okay.
people actually go and park the today in US, the fund size have been growing almost $8 trillion today in money market schemes in US because they actually participate in the interest rate market as it prevails in the market, not as you fix it.
So while on this, Bala, you did mention that many of your debt funds invest into AAA rated bonds, government securities, state government securities. What about credit funds?
See, credit fund is also, there is a merit because if I have to take, so the way we define the bond market is, there are two type of risk you take. One is the duration risk,
Right.
which is the higher the duration. I mean, duration means the period for which you make the investment.
Correct.
To buy a 5-year bond, 10-year bond, 20-year bond,
Right.
the risk varies from 5 to 10 to 30.
The 20 being more
20
risky.
being more risky than. At the same time, it also gives more gain.
Correct.
I mean, it both the side it is there.
Right.
It is true. At the same time, if we go down the credit curve,
Right.
it's a AAA curve, then AA plus curve, the rating of the instrument. As you go down the risk, a AAA curve, say it borrowed, say 7%. As you go down the credit curve, say it go down to A plus, the 7 will keep increasing. The cost of borrowing for lower rated people will become high.
Correct.
The moment is a simple assumption is somebody borrows higher rate of interest. We have to make an assumption, it comes along with the associated risk.
Right.
Any higher return should be associated with the higher risk.
Correct.
So, that being the case, lower the credit, we give higher return. There is a merit for that segment also to be part of the investor's consideration because India as a country is growing faster. You'll find more and more companies come to the market for borrowing. So, one thing we have to be choosy because as a money manager, we have to do a job to ensure that we do the underwriting of credit
Right.
properly.
Right.
We get the right instruments, we back the right promoters, we back the right businesses so that we don't meet with an accident. Let us assume a scenario, even if we meet with an accident.
Right.
The portfolio diversifications.
Right.
I think the beauty of fixed income scheme is you don't invest in more than say 5-6% in a single instrument.
Right.
So suppose one instrument goes for a toss, only that portion of the portfolio only will get impacted. But still, my capital will not be at too much of risky. So in some sense, it gives the benefit because of diversification of portfolios.
In fact, if you look at the risk return math, going down the rating curve actually could be very beneficial for investors because there are very, very few defaults even in the A plus category.
Yes. So let us take the just simple example I'll give during that ILFS crisis in 2019.
Right.
No doubt, it just suddenly came and hit all of us as a country as well as the industry. And there were mark-to-market losses. There were schemes, there were the defaults, there were mark-to-market losses. But if somebody had stayed invested through the entire cycle, see, beyond 2020, with the hope that all things will resolve,
Right.
where the government is taking steps, the Reserve Bank are taking steps, companies are taking steps,
Right.
to ensure that this scenario doesn't remain for too long.
Crisis is solved.
Credit crisis is solved. Everybody is working towards it. Assuming I have stayed with the faith, believe me, those who have stayed in the fund throughout this entire cycle made more money
Right.
than the people actually redeemed. People who redeemed looking at the fall in NAV, especially the fixed income schemes. So equity a bit different. Whereas the fixed income schemes, it comes back because there are mark-to-markets are there. You have to be true to ourselves in providing the day-to-day valuation, taking into account the upgrades and downgrades. But that should not actually make you think that, okay, there's a fall that happened, therefore I may run away. I will redeem and come back later. In fixed income, once you redeem, you cannot be part of the recovery story. So that's why I think beauty of fixed income schemes. That's something if you stay invested for long term, even the credit fund, you do get to enjoy a better outcome as long as you stay invested for long term.
So, Bala, gold and silver ETFs, at one point of time, we considered them as, sort of niche products.
Correct.
But now they've become almost mainstream. I think you talk to any retail investor on the street and he wants to know, should he be putting money into a gold or a silver ETF? And I think now the AUM has also crossed something like 2 lakh crores.
Correct.
So why are investors flocking to these categories of ETFs? And what are the advantages of owning a gold and silver ETF as compared to owning the physical gold and silver? Because we as Indians, love owning physical gold and silver, but
Correct.
there is a slow movement in the new generation to move towards these ETF products instead of holding physical gold and silver.
So, of course, first and foremost, I always used to say the storage risk is always there.
Right.
In gold and silver.
Correct.
So, we used to take it for on two count. One, there is storage risk. The one is something you keep in the cupboard doesn't grow.
Correct.
So, that's the way normally is felt because there is not earning any money for you.
Right.
But price rise is there.
Right.
So, second is last few years, sovereign funds have been the largest buyer of gold. Therefore, create a new demand.
Right.
Coming from people who are other than the real users of the gold and silver.
Okay.
So industries have started using silver, especially the new industries like semiconductor, other industries.
Right.
The needs better gold, silver as one of the component for better the
So there is an industrial use for silver.
industrial use for silver. So the gold is something as foreign funds have come. There are certain countries
And
like
gold also because of the geopolitical issues.
therefore it becomes a dollar hedge.
Yeah.
That's where the demand came. The last few years, ultimately there is a limited reserves are there. Unless you mine more and more gold, you cannot supply gold. That activity has come down because of the environmental reasons.
Right.
Therefore, the current price rise in gold and silver, I would probably assume is not justified.
Right.
But having said that, large pool of money has come into the ETF.
Right.
It's buying and selling become easier.
Right.
Then what you see is the value in the market is more. You see in the same way in ETF.
Right.
Then when you own physical gold,
Right.
you don't see the same value. When you go to the shop for selling,
Yeah.
there will be a 10%, 15% discount, so on and so forth. You don't get the same value.
Right.
Whereas ETF is only one, what you see
Is what you
as a price, what you get.
Right.
And saving is actually in the form of electronic form. You don't need to worry about somebody will come and if I'm hot at home,
Yeah.
I lock my house for 1 month and go, there is a risk of somebody is coming, is opening a cupboard and stealing it.
Correct.
So that risk is also not there.
Right.
And this is purity. When I buy a gold, I'll always have a question mark on purity. You may think as 22 karat gold.
Yeah.
What do you make it about 20 karat gold
Right.
and so on and so forth. These are the
All these risks you sort of.
all these risks get resolved if we come through the electronic form, through the demand. That's why ETF has become popular.
So, another interesting product that the mutual fund industry has sort of offered to investors is an asset allocation fund,
Yep.
a multi-asset allocation fund, where they say that we will give you exposure to equity, we will give you exposure to debt, we will give you exposure to gold and silver also.
Correct.
So, do you think this is a better strategy for a retail investor than sort of doing his own asset allocation or her own asset allocation?
Exactly. I think the all product got evolved over a period of time. And the multi-asset allocation fund is just about 5.5-year-old innovation from the industry.
Right.
So then it gives, of course, exposure to equity.
Right.
When it question equity exposure is invest in all caps.
Right.
Then you get exposure to fixed income, which is the rest of the 68% plus 38%.
Right.
And within 38%, invest about say 15% in gold and silver.
Correct.
And now the new instrument has come, which is the return InvIT, also can be part of this.
Okay.
Multi-asset allocation fund actually takes away the pain of choosing multiple schemes
Right.
as part of a diversification.
Correct.
And for meeting your goal, you choose gold ETF.
Right.
For silver, you should take silver ETF, and then have multiple instruments.
Right.
All come in the multi-asset allocation fund. That's the way the new fund category has come. Somebody actually wants to, do not want to break their head and still want to build their portfolio. The best way to build their portfolio is through the multi-asset allocation fund. There's another category also which exists, of course, doesn't invest in gold and silver, which is the balance advantage fund.
Correct.
It also gives you a solution for the question that all of us have got in mind. Whether the market will go up or down, and at odd point of time, this question keeps coming in.
Right.
So, our money manager actually tracks in terms of when to go overweight on equity, when to go underweight on equity, depending on the valuation, other market trend, and so on and so forth.
Right.
There's also another dynamically managed fund, which is called balance advantage fund.
Right.
Also has come part of the main investment vehicle that one can consider.
So Bala, I wanted to also ask you a question about the complications that we find in equity funds, because you were saying large cap, small cap, mid cap. You initially said that we should look at investing into these kind of funds. But today, if I look at the universe, you have blended funds like multi cap funds, you have flexi cap funds. Now we have sectoral funds, we have thematic funds, we have single factor funds, we have multi factor funds. So, do you think that a retail investor should stay away from all that and leave all those funds for basically the informed investor?
It's not like only informed investors. See, these categories have evolved over a period of time.
Right.
And lately, the names used to be different.
Right.
Now, today, even names are the same.
Right.
Therefore, choosing from investor's point of view is not difficult. Sorry.
Right.
At the same time, each fund carry different kind of risk. So, when I mean large cap fund, so I invest only in the really big size companies.
Right.
In every sector, there are big size companies are leaders.
Right.
And probably you can say leaders of the each and every industry, as long as they actually have some minimum size in terms of market cap.
Correct.
Then you go down mid and small cap. There is a clear definition is there from mutual fund money manager's point of view. Therefore, choosing is not.
So those definitions, Bala, are easy to understand because they are market cap related.
Correct.
But the moment you get into sectoral, thematic, multi-factor, it becomes more difficult for a retail investor.
No, there are also now a lot of these stimulants happen.
Okay.
And today within thematic, if you say, a thematic is nothing but gives you a choice.
Right.
That they not necessarily want to choose or choices while coming to investing.
Right.
But within that, you want to see construct a portfolio. You are too bullish on consumption.
Right.
Sometimes a money manager is bullish on consumption, even in the large cap fund. But he may not be able to own a large component of consumption-driven companies in this portfolio.
Right.
Whereas if it's a consumption fund, I'll have 100% portfolio only on those companies which will benefit out of the consumption boom in India.
Correct.
We have infrastructure fund that invest only in companies that benefit out of the infrastructure boom in India. I will have companies which are, of course, technology companies. I feel bullish on technology as a sector. Then only technology investment that will make on the Digital India Fund. Like even the thematic funds, it gives you an opportunity to participate in one particular segment of the market.
Right.
But where is most important from investor's point of view? You have two types of investors. An investor who is fully invested,
Correct.
exhausting all the options in the diversified category from large cap to the small cap.
Right.
Those investors can actually choose the thematic funds. Whereas the investors who are starting, not even started somewhere, I just keep investing.
Right.
The core portfolio he has to invest. Then he has to first complete his portion of investing in the main basket of portfolio choices, which is from large cap to the small cap. Then come to the thematic funds. See, thematic fund also is choice being given, but not necessarily everyone has to choose that. Given the fact that that everyone is not always invested fully, or maybe exhaust all the options, or everyone actually not even started investing. Therefore, asking these questions, is it something is worth investing there or not? That comes only for those who have actually been in the market for long and informed investors fully exhausted the options. Therefore, he gives them varieties.
So now for the mass affluent and the informed investors, you have another product that is available called the Specialized Investment Funds, right? The SIFs.
Yes.
So how do SIFs differ from normal mutual funds? So in terms of their investment strategy, in terms of their risk return profile.
See, SIF is a completely new category.
Correct.
So, one has to understand why at all the SIF as a category has given a birth.
Right.
And as it is known in the last few years, since I think the COVID hit and a lot of people started getting a taste of trading in the equity market, and during the COVID time, that's the time the retail participation in the country rather individual participation, I would say, not just retail alone.
Right.
Even the HNIs who were never dabbled in the equity market,
Right.
they also came in during the COVID that time. They learned how the stock market functions.
Right.
And over a period of time, the learning curve went so much.
Right.
They started playing in the F&O market, which is the futures and option market. They started trading.
Right.
Then the experience initially was good. But after some the market turned volatile, the experience has become very bad. See, I think there is a statistic which exists. 90% of people who trade in the F&O market, they only lose money.
Correct.
So as stock, at the end of the day, as a regulator, as a country, we should also be concerned for losing money.
Right.
Ultimately, your savings,
Right.
individual savings should be put into use.
SIF solved for that problem.
Yeah, that's where this came. See, SIF actually is actually minimum ticket is 10 lakh rupees. Whereas the mutual fund, you can start from 100 rupees to any amount you can.
Correct.
Whereas SIF, you have to have minimum 10 lakh rupees. That means the people who are the middle class income or people who have been trading the equity market on their own without knowing about how the F&O market functions,
right,
are encouraged to come to the SIF. Where SIF actually designed such a manner, the money manager themselves will have some kind of flexibility to trade in the F&O market using his informed understanding and the decision-making ability to generate return using the F&O market.
Okay.
And give a better experience to the investors. So that's the way this product category as a whole has come.
Right.
So that's why the minimum 10 lakh rupee ticket size has come. It is also for the people who are not, who already exhausted all the options. The SIF is something people have already exhausted all the options in the main category of mutual funds.
Right.
Then actually the SIF comes as part of the add-on product that you can add to your own portfolio, which of course SIF takes into account 20%. I can trade in the futures and options market.
Right.
I can actually, if I'm not bullish, I can short the Nifty or I can short the stocks.
Right.
And if I'm also bullish or bearish, I can take options, writing options on both the side,
right,
put options, call options. I can actually apply multiple strategies using the derivatives market, which the money manager now gets the added advantage of an SIF, which otherwise doesn't exist in the existing mutual fund schemes. Even money manager does not have the same flexibility that is being provided in the SIF. This is some sense you can say somewhat like a hedge fund, so to speak, somewhat like absolute return kind of fund, and somewhat like the high churn kind of portfolio can be generated.
Right.
And that you just compare different verticals. I'm sure over a period of time, this will pick up. It will evolve.
Yeah, okay.
It's too early to make a judgment that this only strategy will work.
Right.
Over a period of time, we will know how this strategy works.
Okay. So, in fact, instead of individuals themselves experimenting on these strategies, now you have a standardized framework where these strategies will be sort of shown to you, and you can decide which strategy you want to participate.
Correct. It's basically giving an institutionalized touch.
Right.
Through the mutual fund schemes is regulated. Fund managers are reasonably well informed and know what they are doing.
And there are multiple strategies, so you could choose. This is the strategy best suited to me.
Correct. As an individual investor, when I go and buy options,
right,
one day I am in mark-to-market gain, one day I am mark-to-market loss. Right. And suddenly you realize when the market turns volatile, your position gets unwind, or maybe you yourself sell and move away.
Correct.
Whereas the mutual fund side, that those are the risk will be managed, because our ability to manage risk will always be far higher than the risk that will be managed by the individuals.
So, Bala, in the mutual fund industry, distributors have played a very pivotal role in the growth of the assets under management.
Correct.
But I think now, as far as metros are concerned, there is fairly large penetration. And I think now you need to move into, tier 2 and tier 3 cities and beyond. So what are the strategies that, the industry and you have for, getting to the next, what I would call Bharat, rather than, the metros in India?
See, in fact, so I have been doing the Bharat Yatra.
Right.
Which I call the Digi Yatra or Bharat Yatra.
Correct. Yes. I have been following you on that.
They have been, even there is a LinkedIn post also I was there for mine.
Correct.
Where I visit the smaller locations.
Right.
Understand the wealth effect. Understand the growth in the respective.
You also dress traditionally when you go there.
Exactly. So I've done this exercise as part of our expansion activity.
Correct.
Even identified emerging markets.
So what is the message you're getting from Bharat?
I think the financial awareness is far higher.
Right.
Not on the savings side, but on the payment banking side, awareness is high. Digital awareness is far higher.
Right.
And they also are quite serious about building for the future.
Right.
And education awareness is far higher.
Right.
and also the income that they have to generate, the self-help group, that income that they have to generate, entrepreneurial model.
Right.
So all these things are quite rising.
Right.
So I think this market, as the wealth effect rises, the natural is that they will start.
But are there distributors in all those places?
There are distributors who are coming in. See, as a Aditya AMC, I converted one of a pharmacist.
Right.
In a 5,000 people living a village.
Right.
He runs his own pharmacy, selling only medicines to the people.
Right.
I said, every day you are sitting in the shop, and not that every now and then people come to buy medicines. Why don't you use your time? Is a graduate,
Right.
is a postgraduate, and you can actually learn financial literacy, financial importance of savings.
Right.
And then we converted him to a distributors.
Right.
And today he has almost about 30 crores of assistant management, sitting in the village, advising customers on one side, at the same time running his own pharmacy. He is able to get both the benefit. But he's also getting the goodwill of customers whom we have advised in the last number of years to come into the capital market. This is something I see as a big change. Second, we of course have been working with the retired post office along with AMFI. I think as a mutual funds, I've been working with AMFI in training
retired postal
employees, our bank employees.
Right.
That's something we are training teachers.
Right.
Retired teachers can also potentially act as an advisor.
Right.
But only we just teach them about the simple product that they can sell, which is nothing but SAP, core product, and so on and so forth.
Right.
This is my view, I think, is picking up. But definitely the awareness is, my view, is far higher. So the digital medium, today digital medium does not differentiate between the rural market and urban market.
Correct.
So that has actually completely eradicated the divide between the rural and urban India. So the digital platform, a lot of the educational video series that goes there. Only the issue that I see in these kind of market, they also equally get carried away by the influencing segment of the market, which I think can scare you.
Right.
A lot of videos circulates around scaring people on various things.
Right.
That the financial frauds.
Right.
So for luring them with higher guaranteed return and so on and so forth. These are some of the things I think becoming, in my view, bigger risk.
Right.
But otherwise, awareness is increasing. Distributors are actually playing a larger role in each of the market. The price is growing. I remember, I look at the distribution expansion by way of here and number.
Right.
Today, the year running number was close to about, say, 2 lakh is the number. That means the last number of years,
2 lakh?
50,000. Roughly, somewhere around 3 lakh number, if I'm not wrong, running number.
Right.
Which is the serial number.
Right.
Which essentially means so many people get added.
So many new distributors are coming into the...
Are coming. I also see a trend, bank employees who have done enough being employment.
Right.
They also now become an entrepreneur.
Right.
Because they also want to serve more and more customers.
Right.
I see as a big change. My own belief is the next few years, the distribution community will also grow big time.
Okay. So you were talking about digital, Bala, and I just wanted to check with you in terms of how are the AMCs leveraging technology and the digital ecosystem to improve their customer service, because today customer expectation is very, very high.
Correct.
And customers expect instant service. And while at that, I mean, has the mutual fund industry and have AMCs leveraged on AI to improve their operational costs, especially today when there is so much pressure to lower your
Correct.
expense ratios?
So, where the technology has played a role in improving the customer service, we have moved away from paper form to the everything online form.
Correct. Is that including in the rural areas?
Including the rural areas. So, do they need to do anything onboarding of customers, KFC, and so on and so forth?
Right.
Investing.
Right.
All of them become online.
Right.
Secondly, within the investing, you need to take care of your joint holding.
Right.
And when you redeem, it has to be confirmed by called two-factor authentication, so the OTP model.
Correct.
And that has now got implemented. It was not there about 2 years back.
Right.
So now all of us implemented that. So that means any return that we make, we ensure that it goes to your bank account.
Right.
We do a penny drop.
Right.
Do a penny drop to ensure that is only your account.
Correct.
We get a confirmation that is your account only the money is getting received.
Right.
Therefore, using technology, I think we do that in the interest of the investors.
So one is onboarding has become completely
easy.
Two is the entire servicing also now has become...
It's a digital. The third, the bigger things. So normally, if you're living in a housing society, and if it is a registered housing society and you are a shareholder of the society,
right,
the society office will keep on asking you who is your nominee, who is your nominee.
Correct.
Suppose you're a single one, If you own your flat and your family members are not added,
Right.
they'll keep asking for the nomination. Society exists.
Right.
In the form of paper form.
Correct.
Whereas the mutual fund, everyone invests, but they don't put the nominee.
Right.
The nominee could be wife, the nominee could be son, or nominee could be daughter,
Right.
or it could be anybody for the matter as you want them to nominate.
Right.
Earlier, it was very efforted.
Right.
It was not compulsory. Today, the mutual funds actually made it compulsory to give the nomination. You don't want to give nomination,
You're all
please say, I don't want to do it, opt out.
right.
These provisions have been done through the technology.
Okay.
Second, if you want to add more nominee, you have a new children born today, you want that children to be added to the nominee.
Right.
You can go and add it up. And today, if you want to add your mobile number, sometimes people change their mobile number.
Correct.
Or email address, they change.
Right.
And if you want to change it, actually you can go and change using technology. Of course, all will get involved from a two-factor authentication just to ensure whoever is bringing the changes, whoever is actually initiating the changes, to ensure that they are the ultimate owner of this money.
Right.
Therefore, they only should have the right to change all these things. All these things are pretty done through the technology, the operation.
Okay.
And finally is the AI, which is, of course,
Correct.
AI is being used to understand the behavior of the customers and then give advice or suggestions basis is
So the asset management company would directly be giving this advice, or
even asset management company can give you a clue. We don't give advice,
okay.
but definitely give you a clue in terms of showcasing the product that could be more suited for him, basis his own search,
Okay.
basis his understanding, or basis his ask of question that he has. Sometimes when you do a search, you know the behavior of the customers, what is they looking for.
Okay.
Then making it easy for him to selection. I think earlier he talked about
Exactly the complicated selection process because of so many funds.
That's correct.
So this
So-
AI helps you over.
AI helps. We also, of course, give even technology provides the funds that are being bought very frequently by people,
Okay.
or the funds which is owned by most of the people, and so on and so forth. They all based on the data analytics.
Right.
So this data they always used to exist,
Right.
but we never used to take it to the public at large to change their investing habit
Right.
or investing style, investing pattern. But these are some of the things now being done using technology. In addition to operation related easiness that you have provided, that I think might be far superior for investors' point of view.
And you talked about these 2 basis points that goes into this investor education phase. So what are the efforts that you as an AMC and AMFI as a body are making to sort of push financial literacy and financial education?
See, initially we started as a promoting mutual funds IER, investing in mutual funds as a right
Right.
from vehicle
Correct.
in multiple languages using TV medium,
Right.
print medium.
Right.
Then came the digital medium. Then we started using celebrities. First, I started with the kabaddi players.
Right.
It has to go to the common man.
Right.
Then we introduced the successful legendaries in the cricket and other things.
Right.
So that's, I think, promotion through that. And then the fourth is actually do ground level activities.
Right.
We actually started at the Aditya Mutual Fund. We started this ground level engagement with the investors, tying it with the local media. We used to have a physical ground level event where we used to invite 100, 200 people in one go, and people used to come understand mutual fund investing as a vehicle. And then they all started becoming investors. Then we started actually having a small format into the Nivesh Mahakumbh on the lines of
Correct.
Mahakumbh that happens in Allahabad.
Right.
And we said we need to do a large format. We used to get 5,000 people in one ground and talk about the mutual fund with the external speakers, the motivational speakers, the people who can actually guide them in terms of law. Even we have tied up with NISM
Right.
in undertaking universities education program.
Correct.
When we started even educating university students, as you are in the final year of your graduation, once you become an employee, once you start getting employed, you start getting money. How to save the money? Educate them. We call it the first paycheck.
First paycheck.
First paycheck.
Right.
So likewise, it's like normally in the early days, first paycheck in our own period, we used to give the first pay to a God and a parent and God,
Right.
and go and put in the hundi and so on and so forth.
Please put it into a mutual fund.
And you go and of course give your parents. You also of course buy some other stuff to keep your family.
But
joyful.
little bit of money into asset management,
Exactly.
to your mutual fund.
Exactly. That's the education we do.
Correct.
And they can tying it with the various universities. So the larger format we do. We even do Kashmir to Kanyakumari through the bus journey. We started the Aditya Mutual Fund. Within Mumbai, our vehicle used to stand, say, in the Aravi for about 2-3 days, educating investors coming to the bus that we used to have.
Right.
The vehicle that we used to have, people used to come and experience it. Basically, that we used to provide.
Right.
But all such initiatives we are taking. Even we used to have all the people who are traveling the train journey, we call it Samriddhi.
Right.
So we started in Chandigarh to Delhi, there Rajdhani. And today we're doing in Rajdhani, we do it in Vande Bharat. For all the people who are sitting in the train, traveling for say 3-4 hours or 5-6 hours, they must engage themselves with some kind of reading.
Right.
And we are actually distribute the magazine which talks about only investing as a mantra.
So I had a last question, Bala, and that is, the entire mutual fund industry actually works on trust, the trust that you have sort of built up with your customers.
Correct.
And some of these steps that have been taken have been driven by regulation, like you yourself said, like, the risk beta. Similarly, SEBI came up with this skin in the game rule.
Correct.
Similarly, you had this unit holder protection committee that needs to be set up at every AFC. Many of these steps, as you rightly said, have been adopted by industry itself, like, greater disclosures, transparency, etc. So how do you see, the challenges in maintaining this trust that mutual funds and the asset management industry needs to engender with, potential investors and existing investors?
So I think the beauty of mutual fund industry is 100% disclosure.
Correct.
Anything that we do is disclosed. I think some of the points that you mentioned about skin in the game,
Right.
and the other such disclosures,
Right.
are to increase the onus on people, accountability.
Right.
Who are the money manager, the CEOs of mutual funds,
Right.
are the people who are running the mutual funds
Right.
on a day-to-day basis.
Mhm.
They must be accountable both to the fiduciary as well as to the investors as well as to the shareholders.
Correct.
That ownership accountability is far higher. Even today, when a money manager has to declare that whatever I've done in the best interest of my knowledge, and so on and so forth.
Correct.
So all decisions are actually checked. And second is the disclosure that comes in, and that the guardrail in which I think you all work. I think there's a guardrail in which the portfolio is like a boundary. You draw a boundary. It's not that open ground. You won't play as you wish to play.
Right.
So those things are there. And then third, of course, the people who are actually running it.
You're saying that the industry itself has put in so many guardrails to ensure that the trust remains.
The trust remains.
Okay.
And with the competitive landscape, the only industry is not only disclosed, is 100% transparent, is also competitive industry.
Right.
So when you're in the competitive industries, you will always ensure that you always do the right things in the best interest of investors, which will of course make your survival easy in the longer term.
Right.
And continue to create your business in order to serve the large pool of growing investors' needs, and continue to maintain the trust element, which I think will become one of the part and parcel of the mutual fund. I think in my view, the trust element of the mutual fund, because the disclosure is so high, is far higher.
Oh.
Yeah.
Thank you so much, Bala, for spending time with us. This was indeed a very fascinating discussion.
Thank you. Thank you. It's my pleasure.